Hope you guys like today's music from Mötley, Crüe, Livewire. All right, welcome to Coffee Time with Torossian, CPA. Pedro, how did you like the music this morning?
Yes, it's good.
Livewire.
Livewire, it's amazing.
Super energetic.
Yes. That's good music.
Well, I figured I could inject something new there, because we've been using some of the same music, and I figured, hey, today let's just try a different music to start our day.
That's good.
All right, awesome. So welcome everyone to Coffee Time with Torossian, CPA. If you are returning to the show, welcome back. If you are new, give us a thumbs up or a hands up in the chat so we know you are new, and welcome you with open arms. For those who are listening, so I guess we can't do that, but that's okay. Give us a like, of course. Go ahead and subscribe, the channel or the pages that you are watching us on. We are going live every Thursday at 10 a.m. Eastern. We're live on Facebook, LinkedIn, and on YouTube. I am your host, Marie Torossian. I'm a CFO, an auditor, a CPA, and a Chartered Global Management Accountant. I use my proprietary methodology, Valuation MT, to help business owners who reach their first million to 10x their profits. And I also have an e-course that matches that, and you can find that on the profitlab.biz/programs. I'm also a Grant Cardone licensee, and I coach businesses in sales, marketing, finance, and mindset management. So you can find those plans under the profitlab.biz plans/pricing. I'm also the author of a couple of books, The Complete Guide to Business Growth and A Business Owner's Guide to Operational Accounting. Those are available to you on the profitlab.biz/shop. So, Pedro, please, you are my featured guest every week. I love having you here. So, please introduce yourself to those of us who have not been listening to us for the past almost a year now.
I know. By now, they should know exactly. But no, seriously. My name is Pedro Gonzalez, CPA. Here in beautiful South Florida. And we help our clients in the areas of cash flow management. As we have said many times, cash flow is the lifeblood of any business, regardless of size of an industry. We also help our clients with income tax management reduction, and that's again, income taxation erodes wealth. And so the only way to build up wealth is by controlling the amount of that we send to the government unnecessarily, and then exit strategies, and we all are gonna exit. It just depends on how. So now is the time. This is a great time to start looking into your businesses and how can you position your business to increase the valuation of your business. We have the ebook on real estate investment strategies. Anybody that's looking into getting into that industry, highly recommend it. It has some good tips in there how to minimize taxes, strategies that you don't hear about most of the times with your current CPAs.
That's awesome. And I have that going in the banner, but I'll read it out loud for those who are listening. You can go to pedrocpa.com/the real estate investor guide. That's Pedro. Hold on, let me read it again. I'm waiting for the banner. pedrocpa.com/the real estate investor guide. And there you go. Again, just a quick recap on some of the things we've talked about in the past episode. By the way, today we are episode 46. Can you believe that? Oh, actually 47. 47. Yay. It's a commitment, Pedro. This was quite a commitment for us, because we get busy, especially now on those times where, when it's tax due dates and we can get overwhelmed, especially on your end, being more on the tax side. And it is a commitment, it's an hour of, us, putting into it. So, and then on the back end, there's other production time that goes in. So it is a commitment. So we are here now, 47 episodes. So Guys, we've talked about, we've talked about E2 investor visa, business plans required for that. We've talked about financial analysis. We've talked about tax planning. We had a whole series about that sometime last year in, I think, November timeframe. We've talked about IRS audits versus financial audits. We've talked about partnership agreements, buy-sell agreements, 1099s. I think we talked about that a few times because this is an area that seems to be still very gray, so we keep covering that area. We've talked about ethical standards in tax and accounting. Recently, we also talked about the Inflation Reduction Act that passed. Literally, we talked like the 3 days after. And we will be talking about it again soon. So stay on the lookout on that one. It's going to be an interesting conversation coming up. Last week, we talked about some capital gains, and we kind of mentioned a few things about messy books. So we both have been working on specific projects this week that expands the messy books conversation. So we couldn't help ourselves. We had to bring that information to you to help you stay out of those messy books.
Please.
So yes, we can get very geeky about this because we know what's in our head, and so you may not get it. But so Pedro, I wanted to kind of start the conversation with, one of the key areas that I know, and IRS may look at it too, but then from a financial audit, it really stands out is the health insurance general ledger account, right? So it's like it's on the profit and loss statement. And sometimes you go in there and there's a whole bunch of stuff in there that has nothing to do with health insurance. So as my guest, I'll let you go into it first and then I'll jump in.
Well, I don't even know where to start with that. No, listen, the health insurance, again, not getting into the taxes and all that, but strictly the accounting. It should be the insurance premium, just like your general liability insurance premium and so on. So that category, what we call insurance expense, should be strictly the premiums that are being paid for the different type of insurances, and it should be segregated. That's the other thing. Don't lump all the different type of insurances into one line item called insurance.
Right.
You know what I mean? So have the sub accounts for workers' comp, general liability, if you're paying some kind of life insurance and so on. You know what I mean? I think it's going to help segregate that. It's good accounting practice. But it's the premiums.
Yeah, absolutely. So one of the things that I saw in some of the cleanup work that I've been doing on a client is, I'm seeing special spa visits or some stuff that seem to be, let's say, similar to a gym or some kind of a subscription that has to do with personal health.
Mm-hmm.
That has nothing to do with health insurance for business purposes, guys. So, unless you are offering some of these special, extra reimbursements or something for the whole team, it's not a business expense. It's not just for you. It's personal.
Yes.
And I think this is where it gets so. I don't know why certain business owners do that, and I don't know, Pedro. You jump in, please, wherever you see fit. I don't know why business owners feel that there's certain things that they can just get away with it, but something is eventually going to come out. Like someone like me is going to go in, they're going to ask for help, and I'm going to find everything.
Yeah.
And I'm not going to let them just put it anywhere.
Yeah. It is. I like creativity. I told you before, I like to think that there's no box. I get asked many times, is this deductible? Because and the answer is it depends. I mean, you have to look at the business connection. You mentioned, for example, those spa visits. Mm-hmm. Could it be a business expense? It depends. I mean, you have to look at how the connection is necessary and reasonable for you to claim that as a business expense.
Right.
So you have to kind of keep that in mind. And I like people to think on and in general, how can I connect those expenses that are being incurred to make sure that they're treated as business expense and not simply be lost through shareholder distribution or something like that.
Right.
So, but
Totally.
you have to be reasonable. You have to see how this
Exactly.
is relevant to the business. As you mentioned, it could be an employee benefit program that you have, for example.
Exactly.
Is it being paid through a cafeteria plan, a Section
Mhm.
125 plan, or something like that, where it's part of an employee benefit program? Um, it might be possible that those could be treated, but I would not put it under insurance. You have to be careful not to lump these expenses into a
Exactly.
category. Um, and you mentioned health insurance. The other ones is supplies. I mean, sometimes it's used as a dumpster
Yes.
for many other things. You know what I mean? So
Yeah.
we have to be careful. The IRS is aware of
Hmm.
of these patterns, and they target these type of accounts because they know that people are not so careful of what is put in those categories.
Right. Right. Absolutely. Another one that I've seen is, you know, going to massages. That
Mhm.
and what I see is that it's really the only expense is the business owner going to massages. Now, here's the right way you might want to do it. If you have a masseuse come to the office
Mhm.
and everyone gets a massage, that's a business, that's an employee benefit, that's a business deductible expense. But you, as a business owner, just doing it for yourself, it's not a benefit to part of the business, and it's part of a team, so it's more of a personal expense. So it's something that we really have to watch out, as a business owner. Just keep an eye out, don't just start dumping stuff there. And
Correct.
those of you, if you have a bookkeeper or someone helping you out in the books and they're not aware, please tell them not to do that.
Correct.
Um, Pedro, so earlier we were talking, you mentioned this very cool story about, a fluffy little dog. Can you tell us that, please? We
Fluffy.
want to know.
Yes. No, what happened is somebody contacted me and then said, well, another relative deducted his dog on his taxes, and so he wants to deduct Fluffy. And it's like, well, can I deduct Fluffy? Is Fluffy deductible? I said, well, it depends. And so, how exactly is Fluffy related to your business? Well, no, he's my pet. And when I after work, I sit down with Fluffy and I like to play with Fluffy. Well, but that's not a business expense. What happens is that the other individual is watchdogs. That are pit bulls that they hire for his junkyard,
Mm,
and so it's basically like
their
employee
security.
lifeguards. Exactly, security. So that's the difference. Those are not his pets. You know what I mean? That he's playing with them. These are specifically he bought these dogs to watch the area at night. So it's a big difference. When it's something deductible, it depends. You hear stories of things that are deductible. Suntan lotion and some industries. You know what I mean? And
Right,
things like that.
right.
You say, well, okay, so then my suntan lotion. No, it doesn't mean that. What it means is it depends on how it's relevant to your
To your
business.
business. Right,
Correct.
right. Absolutely, absolutely. And for example, another one in the dog example could be
Mhm.
if it's a like a treatment dog, a dog
Correct.
that you can bring.
Therapy.
Therapy dog, that's the one.
Yeah.
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 So if let's say the business owner is bringing a therapy dog, that's a certified therapy dog that comes to the office, and everybody, let's say on the team, gets a chance to spend time during therapy, it
Correct.
becomes an employee benefit.
Correct. But exactly. But see, right there, you see the difference on how is it that the connection between that and the business. How is this expense relates to your business,
Right.
and how can I make it possible to make a deductible? Now you buy the Fluffy and it's your personal pet, and I just go home and it's not,
Snuggle.
even though yes, it's possible that it's helping you relax. This is how I wind down after a stressful. Yes, I understand, but you have to see how can I make a deductible. You know what I mean?
Yeah.
So there's ways to do it, but then like you said, you have to find, like for example, like you said, the prescribed medical treatment or something like that.
Yeah. Yeah. Absolutely. Something that came to mind, I think one of our clients has asked before, and when the business owner is like, now that they make some money, they want to start buying assets under the business. It's the same thing. It's like, how is it related to the business? I want to buy a boat. I want to buy a jet ski. How does that actually help the business? And what is the connection, right? That's another one that we see a lot.
Yes. Yes, and all of that is possible. You hear stories of how certain people, and it is possible. You know what I mean? The thing is that you have to make the connection, and it has to be documented. It has to be shown that how is it that I'm able to deduct my yacht as a
Yeah,
business expense? Is it possible? Yeah, it's possible, but you have to just because you bought it and bought it under the company name does not automatically makes it a business asset and deduction. You know what I mean? So you have to kind of make the connection to make sure that it's used, substantially or exclusively for the business. Because you buy the yacht under your personal name, I'm sorry, the business name, and you're using it for personal. Well, how's that helping the revenue
exactly.
generation of your business? You know what I mean? Just because you're taking pictures on social media and say, "Hey, here, look at me and my new yacht,"
Yeah.
that's not necessarily the business connection you want to make. So.
It's not a marketing expense.
Yeah, exactly. You have to do if you're gonna do some marketing. I can tell a couple of things. If you buy the yacht and you're you're inviting clients or prospects, and you're having a meeting, or you're inviting your employees to do business meetings or something like that, then you can see that then now this is an asset for my business.
Right. Right. Yeah, I mean, or let's say if you're doing a quarterly employee meeting or a quarterly, something that you're using. So now you can at least, assign a percentage of use or something where you can
Correct.
now allocate a portion of it towards the business and the rest for personal. Absolutely. Similar to where we talked about this, about how they want, certain times they want to purchase a car under the business, but they're still using for personal as well.
Correct.
So you can't just completely do that. Absolutely. Another interesting thing I saw this week as I was cleaning the books, um, under rent, I see mortgage payments, but there's no mortgage note payable or any kind of a house listed on the business or building.
Yeah.
Guys, this is like such a big red flag. Like you have no idea. Like if you're paying your mortgage from your, like, for your house, your personal house or whatever it is, from your own business, like it's not it's not it unless you have some other system set up. So this is a question I had to send to the client, like, can you please clarify why you're doing it this way? Is there something, because I
Yeah.
need to understand if there's any other situation happening there, like in certain situations where someone may have their house under some kind of another business and they rent it to themselves and that kind of stuff. So I just need to understand if it makes sense
Correct.
why that's there, a mortgage payment in there. Very odd, very odd. So
Yeah, I have seen a situation where they want to deduct the rent of the apartment, what the living quarters, because they happen to have a home office at that place. Now, that again, you have to go through a different methodology how to allocate those expenses. You can deduct home office, but you don't deduct the totality of your rent and utilities and so on. You have to, there's a process that you do, and there's a recommended what we call a accountable plan, where you can have
mhm.
the company in essence reimburse you for your personal, because in reality those are personal assets or personal property that I'm allocating some percentage of that personal space into business, and the company in
Right,
essence reimbursing you for those expenses, but it's not rent.
right, right, exactly. So yeah, these are like things that I saw that were such red flags, and that I sent the client about a 20-page questions and
Yeah.
and images of all the details that I was seeing, that and so we're going to continue working on cleanup. But so these are some of the stuff that I saw. Let's see what else. Um, oh yeah, negative receivables.
Uh, yeah.
Negative balance receivables.
Yeah.
Somebody paid more than they had owed to you.
Yeah.
So
Yeah. The only time that I could see, and it really is not, it should not be left as a negative
yeah,
receivable, is if you're, for some reason, you're paying some sort of advance to a vendor, uh,
right.
but, you're paying some kind of advance. So therefore, you're paying more than what but still, it's not a receivable. A receivable,
Yeah,
is money owed to you. So you should not
exactly.
have a negative receivable. You should not have a negative payable. Those things there is classified differently. So if for some
Right.
reason you're paying a vendor more than what you owe them, it's not a negative payable. You know what I mean? So you have to reclassify that because again, you leave that, and I have seen it on returns. That's the thing is it's left
Yes.
there. It makes it to the tax return, and then it
Yes.
becomes a red flag for further question because they're gonna, they look at this. What is this? I mean, a negative receivable. Um, it makes no sense. It's just saying, hey, look at me. You don't want that with the IRS.
Exactly. Exactly. And that's exactly what happened in this case. As I was looking back to 2 years ago, that's exactly what happened. A negative balance was reported on the tax return.
Yeah.
So yeah, there was just a lot. I mean, this is just a few that I've picked to discuss today. But I mean, I'm telling you, this was like it was about 350 elements that we have to look through. And I really want to push the idea here that, I mean, when business owners are thinking of doing things on their own, and they're creating all these accounts, and maybe sometimes because they want to create the details, which is fine, but then managing all these detailed stuff with someone on the team that doesn't understand what they're doing.
Yeah.
Now someone like me has to come in and spend, God knows how many hours going into details and then send question after question after questions to like why
Mhm.
things are wrong. And if someone like me is in there, I'm gonna go and find stuff going back to like 10 years ago because I'm gonna find the problems. And then it's like a really big issue. So um, think about what you're doing with your books. The books are the basic bookkeeping is what's really important for you to do
Mhm.
your tax returns. Like make sure someone knowledgeable is working on those things. Don't hire just random person, and please, some of you just hire, family members out of necessity. Okay, it's good when you're still just starting out, maybe, but you gotta hire someone, a professional that's overseeing or correcting on a quarterly basis. You can't stress this enough to help make sure that as you're growing your business and now you are a $23 million company, okay, you don't have chaos in your hands.
Correct. Listen, exactly, and that's a very good example, Marie. I mean, if you want to hire, a family member, but do it correctly. You know what I mean? Like, for example, they should hire you to supervise that person at least for a period of time until that person, in essence, can be released to do the bookkeeping. You know what I mean? But the thing is, hiring my uncle because he's in need, so let me put him in something so critical
Right,
of the business. It's like
right,
again, I know you and I have talked about this. It's like will you trust your uncle with your heart surgery? I mean, you wouldn't. And I mean, how? I mean, you would never. If I were to tell you, you would say, "Yeah, you crazy." Yeah, of course not. So why would you trust somebody with your finances? Because that's what is happening. I mean, you're trusting this individual. He's your uncle, fine. But then maybe hire Marie to at least supervise uncle for, I don't know, give him a target, 3 months, 6 months, and then that person now understands, how to properly do it. At least some of the major day-to-day transactions, and Marie can
right.
do the quarterly reviews, and then it becomes that to me is the prudent way to do it. You know what I mean?
Yeah,
I'm helping my uncle. I'm giving him a proper training. He has
right,
somebody that provides him supervision. If my uncle gets into a little bind that he doesn't know, he knows how he can call Marie. Hey,
right.
Marie, I don't know how to post this or whatever. And that to me is an efficient way on how to, one, yes, my probably I'm minimizing Marie's time and her fees. I'm helping my uncle, but Marie is also receiving qualified quality bookkeeping for her to do her work.
Right, exactly. I mean, and this is really, the whole show is really to help the business owners out there. This is exactly the reason we're bringing out all our experiences out here, These are like our war stories. Pedro and I call these our war stories because this is what we're doing on a day to day. Like we find these problems and issues and we're bringing it to you because we want you to learn and pay attention. Notice these issues that are happening to others and avoid them. Avoid the mistakes that are others going through. That's why we cover these things. So let me see. I had a few notes here just to make sure that we cover everything. Oh, another big thing that I saw was constant entry, like journal entries being entered for everything. So if, for example, whether you're using QuickBooks or you're using some other kind of a software tool for your financial, recordings, use the tool for with all its abilities. Avoid using journal entries unless it's an adjustment, and let your accountant, a knowledgeable person, do that, because journal entries get posted in the wrong account and create more chaos than actual help if it's done incorrectly. And one of the sad things is that not one journal entry had an attachment or a proof of what it was about. So if I'm the auditor, in this case, I'm like not the auditor, I'm just helping them out to clean their books, but I'm kind of using my auditor hat to find the problems. Imagine an IRS auditor is going to come in and be like, "What is this? Why did you record this? Why did you?" You have no support in your software for that specific transaction you recorded, and no explanation. I'm like, I don't know. Why did you record it this amount and not some other amount? Where is the work? Where's the schedule? Where's the spreadsheet? Nothing. It was like avoid journal entries unless you really need to do it.
And like the name says, adjustment, it should be that. I mean, and it should not be that many. I mean, the adjusting entries it has a specific purpose, and that is usually is reserved for us. The accountant, the CPAs. You already did the bookkeeping, and I'm making an adjustment, either be a tax adjustment or be a financial adjustment.
Mm-hmm.
But it should be, it has a specific purpose. Something like a depreciation adjustment. You don't, your client is not doing the monthly bookkeeping, the depreciation, and you, Marie, come in at the end of the year or the quarterly basis, and you're booking a depreciation adjustment.
Right.
And it's very clear you have a depreciation schedule to support that adjustment, and that's the extent of that adjustment. But the one that should not be happening, for example, is adjust cash.
Yeah.
You know what I mean? And I've seen it many times.
Yeah.
And you look at the general ledger, and all of a sudden either be a debit or credit, adjust to cash. Okay, so what happened is the
right.
You should be asking yourself, and you as a business owner, you don't want that to be happening. Adjustment, because it lacks the whole purpose of accounting, is that my transactions are being accounted for. Instead, this individual did some debits and credits, and there's no backup. That's not bookkeeping, So.
Yeah, absolutely. I mean, we can go on forever and ever. I mean, there's still more. I'm sure I can do another session next week with the additional stuff that I found. I mean, this is really, guys, this is for helping you out, make sure like you really avoid these problems and issues that come up constantly that we see. We really want to help you out here. Pedro, any thoughts? I mean, we are already at the 30-minute mark, so just want to make sure that if there's any other things that's on your mind, any story you want to tell us.
Well, very quickly, one is the accounting. We have said it many times, the foundation of many aspects of our business. So do not take it lightly. I think you should take it seriously as an entrepreneur, as a business owner. You should invest in that area to make sure that all my expenses are being accounted, because it has an impact on my taxes in other aspects that we have discussed, business loans, projections, you name it. It has an impact. So take it seriously. And one last thought we were discussing earlier today is that the IRS yesterday announced they're going to be forgiving the penalties for late filing. So just keep that in mind. It's only for 19 and 20. If you have not filed for 19 and 20, you have to file it by September 30 of this year. If you want to qualify or at least be included into that forgiveness, If you file after, obviously, they're not going to grant you the forgiveness. So you have to hurry up if you, for some reason, have not filed yet, 19 and 20. You have to do it by September 30. Again, it's for late filing. It will not include a late payment or underpayment of taxes. So, but still, it could be a relief for some people that were affected by COVID. Uh, and
Right.
also, a lot of this has to do with even the IRS itself. I mean, you did file, but somehow got lost in the process. It has not been, it's amazing, even as of today, there's still returns that have not been processed. And so,
Wow.
because of that, they issued a late filing, and then it's like becomes a battle. So, this is a response to a lot of the criticism towards the IRS.
Sounds good. This was great. I hope you guys enjoyed this. I mean, this was a lot of information. I know we covered a lot of stuff. So please make sure to come back to see us
Yes.
next week. But I always leave the show with a quote of motivational speaker Jim Rohn. You are the average of the 5 people you spend the most time with. I hope we are 2 of the 5 people you are spending your time with to learn and grow your business. Until the next episode, have a wonderful and blessed rest of your week.
Wonderful. Take care. There you go.